Most people do not have a spending problem. They have a system problem. That is the truth that the personal finance industry spends billions of dollars obscuring every single year, because a person who understands their money clearly is a person who needs fewer financial products, fewer credit cards, fewer debt consolidation services, and fewer emergency loans. The moment you build a real budgeting system around your real life, the noise disappears. The anxiety quiets. And for the first time, money starts moving in the direction you actually want it to go rather than the direction it has always drifted by default. The reason this method worked so effectively for generations before digital banking is that cash creates a psychological friction that card transactions completely eliminate. When you hand over physical notes, you feel the transaction in a way that tapping a card or clicking a button does not replicate. The money becomes real. The trade-off between spending it now and having it available later becomes visceral rather than abstract. Studies in behavioral economics have consistently confirmed what the envelope method understood intuitively for decades. People spend less when they use cash than when they use cards, not because the math changes but because the emotional experience of the transaction changes. The modern adaptation uses digital envelopes through apps like YNAB. You Need a Budget, or Good Budget, which replicate the category-based allocation of the original system without requiring physical cash. Each category has a digital balance. Each purchase reduces that balance visibly and immediately. The friction is partially restored through the act of logging the purchase and watching the category balance fall. It is not identical to handing over cash, but it is significantly more engaging than a card statement reviewed at the end of the month when the money is already long gone. The fourth strategy is pay yourself first, and while it overlaps philosophically with the savings automation element of the 50-30-20ths approach, it deserves its own full treatment because the mindset shift it requires goes deeper than a mechanical adjustment to when money moves. Most budgeting frameworks treat saving as a destination, the place your money arrives after all your obligations have been met. Pay yourself first inverts this entirely. Saving is not what happens after your life is funded. Saving is the first obligation. It is non-negotiable. It is a bill that you pay to yourself with the same reliability that you pay rent to your landlord. And everything else, every other expense, every discretionary purchase, every lifestyle choice, is funded from what remains after that bill is settled. The practical implementation is automation. On the day your salary arrives, a predetermined amount moves immediately and automatically into a savings account, investment account, or retirement fund that is not easily accessible for daily spending. You do not make this transfer manually each month because manual transfers depend on willpower, and willpower is a depletable resource. You make it automatic, and then you build your monthly spending life around the income that remains. Within a few months, your brain stops registering the transferred amount as money you have. It becomes invisible in the same way that tax withholding is invisible. It never enters your mental accounting of available funds because it leaves before your hands are on it. The research on this approach is unambiguous. People who automate savings consistently accumulate more wealth than people who save manually, even when income levels are identical. The system removes the decision. And removing decisions removes failure points. The fifth and most advanced strategy on this list is the values-based budget, and it is the framework that tends to resonate most powerfully with people who have tried every other system and found themselves technically compliant but personally unsatisfied. A values-based budget starts not with categories or percentages or apps but with a single question. What do I actually want my money to do for my life? Not what should I want? Not what do financial advisors recommend? Not what does the standard budgeting template suggest? What do you, specifically, with your specific life and your specific definition of a life well lived, actually want your financial resources to enable? For some people, the answer involves travel. For others, it is financial independence as early as possible. For others, it is providing an exceptional education for their children, building a specific business, owning a particular property, or achieving a form of security that comes from knowing there is a specific number in their savings account that nothing can touch. Whatever the answer is, The values-based budget allocates generously toward those priorities and cuts aggressively in every area that does not connect to them. This sounds obvious until you actually do the exercise. Because most people's spending, when examined honestly, does not reflect their stated values at all. People who say their priority is financial independence are spending heavily on lifestyle inflation. People who say family is everything are funding subscriptions and habits that serve neither family connection nor any other meaningful priority. The values-based budget forces the confrontation between what you say matters and where the money actually goes. And that confrontation, uncomfortable as it is the most clarifying financial experience most people will ever have. The thread running through every single one of these strategies is awareness. Not restriction. Not punishment. Not the grim satisfaction of denying yourself things you want. Awareness. The moment you know exactly where your money is going and why, the anxiety that most people carry around their finances begins to dissolve. Because financial anxiety is almost never really about not having enough. It is about not knowing. It is the uncertainty, the vagueness, the sense that money is moving through your life without your full understanding or consent. A budget, any budget, built on any of these frameworks, replaces that uncertainty with clarity. And clarity is worth more than any specific financial strategy. Pick one. Run it for 90 days without abandoning it the first time a month gets complicated. Because every month gets complicated. That is not a sign the system is broken. That is a sign that life is real and your system needs to be real enough to handle it. The most effective budget is not the most sophisticated one. It is the one you actually use. Consistently. Imperfectly. Every single month without stopping. Build that and everything else follows. If this gave you clarity, hit subscribe, because every week we go this deep into the financial strategies, mindset shifts, and real-world frameworks that actually move the needle on building wealth from wherever you are starting. Share this with someone whose relationship with money needs a reset. And drop a comment below telling us which strategy you are starting with. We read every single one. See you in the next one.